Let's bring in Diane Swonk, chief economist for Mesirow Financial Holdings. She's a former advisor to the Federal Reserve Board. The Wall Street Journal has called her one of the most accurate economic forecasters, and she joins us from Chicago. Diane, welcome back to Bottom Line. Always a pleasure.
Good to be here.
Diane, yesterday's Fed statement, was that about what you were expecting, or did you want to hear more? Was the Fed aggressive enough given the current economic climate and that recent downgrade by S&P?
Well, I think those people who were expecting to actually see an outline of QE3 were very, a little bit overly optimistic on what the Fed would do. I always expect this, actually, this Fed statement gave me more than I was expecting by holding rates for 2 years if the economy remains weak till mid-2013 at near zero on the Fed funds rate, and also shifting more to an easing bias, which is opening the door, of course, to all the other alternative measures and unconventional, which means QE3, quantitative easing. Maybe in a different form this time, nobody knows, but certainly opened that door, gave a nod to it, and I think that's something that the markets didn't fully understand. And I also think the reason that we saw so much dissent, I mean, they only had a half day to process this. A lot has changed in the last 2 weeks. The Fed's been on calls over the last 2 weeks trying to deal with the downgrade. They were very quick to respond to that last Friday within half an hour, saying this will not affect bank capital ratios, thumbing their nose at S&P. So they've been on the ball. They've been talking a lot, but they've been trying to process a lot of information, and I took the dissents as part of an extension of what Ben Bernanke has sort of encouraged, and it doesn't mean he can't execute on QE3, but I think a lot of the markets took that as almost a near mutiny on him.
That's funny because you mentioned that the dissents. PIMCO's Mohammed Al-Arian telling us today that those 3 dissents among the members of the FOMC were, in his words, meaningful and consequential. Is he right?
Well, they are meaningful, but I think really timing is an issue. Something similar happened. There's a real reminiscence to last August when Ben Bernanke and the Federal Reserve Board was seeing information coming in very quickly, but then they had to process it quickly. And many on the Fed did not feel the reinvestment program that was announced later was actually, they didn't agree with it. They leaked it to the Wall Street Journal, and then at Jackson Hole, Wyoming, where I was, it was a very ugly, a lot of discomfort. So I actually think, the composition, it included the Minneapolis Fed, who's not someone who usually disagrees with Ben Bernanke. I think there was just a discomfort in how rapidly they had to process this in a one-day meeting, and there really wasn't any time to corral, I won't even say cats, I'll say mountain lions at this stage of the game, but Ben's very good at that.
Diane, is the U.S. economy going through a slowdown, or are we witnessing the beginnings of another recession?
I am very worried. I think we're going to skirt another recession with the aid of the Fed. I'm very worried, though, that we could be on the brink of another financial crisis. It's awfully reminiscent. I think it can be averted, and it's completely man-made. Not that Lehman wasn't man-made, but there are many things, looking at the last couple of weeks that have added insult to injury, not the least of which is the Standard & Poor's and just the ugliness around the debt ceiling debate itself. So all of that put together has really shaken confidence. When you put it against a backdrop of a stall speed economy, you worry about the economy stalling out. I think we're going to still sputter along. We do have better fundamentals than we did in 2008. We've got better capitalized banks. We got a lot of money on the sidelines, but you got to deploy it. And unfortunately, I think we just validated a lot of companies holding that $1 trillion on the sidelines. It looks good right now. It was good to have that cushion, and I'd rather them to feel confident to redeploy it in hiring and investing.
But Diane, you mentioned that S&P downgrade. Let's take a look at the after effects. We did receive word today that Democratic and Republican leaders in the House and Senate, they are finalizing names for that 12-member special committee assigned with finding $1.5 trillion in budget savings. Where should the committee begin looking? And given the intransigence during the debt ceiling debate, as you just alluded to, are you concerned about the possibility of gridlock?
Well, I am concerned about the possibility of gridlock, absolutely, and I'm not impressed that they won't take the gang of 6 that have been working so hard on these budget issues and put them square in the middle of the super committee. They've moved away from that. The people who really know budgets are not. It surprised me. It didn't surprise me politically. It disappointed me. And it's further, this is just not the way to handle things. Take the people who've been working on it the longest. I don't care if you like their opinions or not. They've been working on trying to figure this out with, ideological extremes and finding common ground. And that's where we need to move. We need to move more decisively in that area. I think that would bolster confidence a lot. And it doesn't look like we're doing anything in that front to do that.
Diane, in our last 15 seconds, the president is meeting with Ben Bernanke at the White House today. Are you expecting anything to come out of that meeting?
Well, I hope we don't have anything come out of that meeting per se, but I do expect more out of Ben Bernanke not too long down the road.
Diane Swonk, Chief Economist, Mesirow Financial Holdings, joining us from Chicago. Diane, it's always a pleasure. Thanks so much.
Thank you.